Okay, welcome everybody to Wall Street Reporter's Discovery Day Company Spotlight. We have a brand new company for you, which is Stria Lithium. And Dean Hanish, the CEO. Dean, welcome to the program.
Thanks for having me.
So Dean, what's really exciting is that, look, everybody knows that EVs, electric vehicles, that is the future. We're moving away from the internal combustion, the gas engine, and lithium is the new oil, right? Lithium, the battery metals are the new oil, and Stria is essentially exploring for lithium in what I'm calling the Saudi Arabia of battery metals, of lithium, which is Quebec, and specifically James Bay, which is your region. That's kind of the elephant country, where we've already seen a number of explorers there. Like, the stocks have exploded, and I mean, because I've gotten some incredible results. So you're in the right neighborhood. And today's goal is I kind of want to have you introduce the company to our audience. We'll run through a presentation. It'll be kind of like, this is going to be the official presentation here, the deck, and then we'll come back. We'll have some Q&A, and we'll let investors decide if this is going to be our next big success story, because we've had a couple of winners with mining stocks in the recent past.
Thanks very much, Jack. Yeah, I look forward to having this opportunity to present to your group of investors. You are right. I think that Canada right now is very strong in the critical minerals, especially in Quebec. They have a lot of the lithium and a number of the other critical minerals and rare earths. So yeah, I look forward to sharing that story with you guys.
Okay, so what I'm going to do, Dean, is I'm going to turn it over to you. We'll start the presentation, and I'm going to come back as soon as you're ready for questions. Okay, so take it away.
So Stria Lithium, we're exploring Quebec for spodumene-rich pegmatite deposits to supply the next generation of lithium-ion batteries to meet government-legislated demand. So a little bit about Stria. I mean, Stria is an emerging North American resource exploration company looking for lithium reserves, as I said, to meet legislated demand for electric vehicles and the rechargeable ion batteries. We are specifically focusing on developing our Pontax lithium project, which is a project that was acquired in 2013, about 10 years ago. We have 68 contiguous map claims totaling about 3,613 hectares. And one of the reasons that we chose this property, and again, being lucky to be able to pick up this project 10 years ago when it was very easy to pick up a project in lithium. Lithium wasn't a thing. So we had this project chosen based on a number of reasons. One of them is easy access. So we're located 22 kilometers west of the property is a major highway. There's not a lot of highways up there, so it's important to be close to that. We have power that's adjacent to the property. We also have Eleanor gold mine, which is very close by, which would allow us to bring the right capacity of electricity into the project. We are in Quebec. Quebec is historically very strong in mining, supports mining, and I think that they have a very good outlook for mining to support the critical minerals and for the EV boom that is happening. So they are going to be spending, upwards of 4.7 billion in infrastructure. They have an agreement between the Cree Nation and the Quebec government to put roads and rail in locations that would be beneficial to take the minerals out of the property, which is pretty impressive that they've decided to build it on those aspects. I think the biggest opportunity here that really to drive home is that lithium is a critical mineral, obviously used in the universal fight against global warming. And I think that our governments, as we can see, have imposed mandates both in the USA and Canada. Obviously, the USA having a much larger economy and a lot more vehicles on the road, and Canadians being right beside them, sharing the longest unprotected border in the world, gives us a good opportunity here to reach these goals. If you see here, 2035, all vehicles in a phased approach have to come to zero emission. 2030, half of all the vehicles in the United States at zero emission. And you've got, 300 million vehicles on the road. So you can imagine the extent of this. Right now, I think it's important that the governments have decided that they're going to have these mandates and they want to reach these goals. But there is a problem. The problem is that 80% of the world's lithium is produced in China, Australia, and South America. And so foreign countries generally are going to want to keep control of their critical minerals in order to secure the manufacturing and benefit from the value add that comes from it and the jobs and things of that nature. So without a domestic source of critical minerals, North America is going to be at the mercy once again of foreign controlled supply, as we were with oil and having to protect our interests around the world, et cetera. So I think that, it's going to put our EV and zero emission mandates at risk if we don't have a solution for this. Also, the goal of this is, that we are trying to cut down on greenhouse gases. And obviously, if you're shipping ore from overseas, then it's just going to add to that, add to incurred freight costs. It's going to make it difficult for us to mitigate geopolitical risk, which I think is the biggest driver as well. And probably another biggest driver is that it's difficult to participate in job creation. So it's important for North America to realize that they can get a value add in the manufacturing part of it through plants, the secondary manufacturing, and participating in that. So the governments have realized this and they have a solution. And the government's solution is actually a very good one in this case. I'm highly impressed with both the US and Canadian government to address this systemic concern. The US came out with the Inflation Act, which is basically grants and funding to critical minerals industries. And they're also going to be subsidizing manufacturers that use North America critical minerals. And that also includes Canada. So we were included in that. The Canadian government's doing the same thing. The importance from that is that the government realizes that this is an opportunity for them to reclaim energy as a whole and not have dependency like we did for oil and gas, where we have the critical minerals here. So instead of oil and gas, you need lithium, you need nickel, you need cobalt, and you need a number of graphite and other things. So the government's realizing that they should help on the supply side as far as, companies that are in mining and supporting them with grants and what have you. But also one of the important things is that they realize if they attract the other value add type manufacturers, your OEMs, your car manufacturers, automobile industry, battery makers, and they're going to actually be giving subsidies to those groups so that they come here. And it's something that's quite impressive. And to be honest, it's working. So, you can see, I don't know if people have seen recently, but, Biden is funding North American minerals, including Canada. Canada's investing in battery partners to set up operations in Ontario. The Canadian government recently gave out $27 million to E3 Lithium for their technology in lithium for more of a salt brine type setup. We were able to get a grant from the Quebec government. You see that Volkswagen has announced that they'll be coming to St. Thomas in Ontario to set up. So these type of subsidies are really working and bringing the manufacturing companies here so that we're able to participate in the jobs, but also securing, our nation's future as far as independence and being able to meet the needs of our critical mineral. And that's why we do say that, Quebec is potentially the next Saudi Arabia in this front. So what does that mean for, us investors, people in general? I think the opportunity because of this, so you've got legislated demand on one side, which is the government making it happen. Two, the government's actually supporting the companies, and the government is also bringing in other companies through their subsidies to set up here. So this provides an opportunity because, the largest EV market is in the USA right now. And namely, lithium will be required in order to meet these goals. The US policies have included Canada, as I said. Canadian lithium exploration companies can fill this government-created demand. And so we say it's a generational investment opportunity that countries are mandating such a massive change in this timeframe. Of course, to reach the goals by 2030 and 2035, there is a lag from exploration into production in order to do it. And so it's impressive that the government is actually seeing that and is putting money in today so that they'll have those minerals in the future, and that battery companies and automotive companies that use North American critical minerals will be getting that those subsidies to come here. Now, we've seen even from the mines, it's the first time you've ever seen governments financing mines. And of course, as an investor in a mining company, it's obviously non-dilutive. In a lot of cases, with these type of loans and grants, you're able to pay it back out of production, which is definitely a better way to go. You see that the Canadian government has permitted a number of mines in the last year, and the minister even mentioned at PDAC that we can't take 10 to 12 years anymore to permit mines. It has to be done in a fast and efficient way in order to meet this demand that's coming up. You can see the lithium price trends. This chart will show you with carbonate and hydroxide and lithium. There is going to be heavy demand for it. I think a lot of people have mentioned, well, China has been dropping the price of the concentrate, but I think there'll be a decoupling at some point because the setup in North America is just more important because of the subsidies. So you have a chart, showing supply and demand, and that there should be a shortfall in this demand. I think that this shortfall will definitely be there for North American critical minerals, because you have to separate those critical minerals from the critical minerals that come from overseas. Because if you're taking critical minerals from overseas, you're not going to get the subsidies. So I'll talk a little bit about, the Pontax lithium project, which is where we are. And really, we're in a tier 1 location for mining. As I said, it's a Quebec, it's a friendly jurisdiction. You find mines around other mines. We're surrounded by world-class multi-billion-dollar lithium projects planned for battery production, as well as facilities. You have the provincial and federal government support in the critical mineral space for exploration and mining companies. We have cost-effective renewable hydroelectric power source, which is very important. Quebec, I think, has the lowest cost of electricity in North America, for the exception of maybe, Alabama, one of those places. But we're funded to execute on this exploration strategy. So we did do a deal where we have our project being funded by another party on an earn-in, and we have about $3 million in the bank. The other important factor, which we'll get into later, is we have a very tight float. We have about 25 million shares outstanding, about 39 million fully diluted. And so we really are in a good place right now, funded for this thing to move forward. So I'll talk a little bit about the Pontax lithium project itself. We did some drilling, really started in 2017 with drilling. Once we saw that, lithium was starting to come aboard, we launched a first drilling program. We completed all 7 holes. It was a very shallow, simple drill program just to test the pegmatites to see what was there. We hit all 7 holes. You could see some of those grading percentages up there as well. So the best intercept was 21.39 meters, grading 1.16%, which is comparable to the type of projects that are successful going into production in the area. 2020, we drilled another 11 holes for about 1,500 meters. We hit 10 of the 11 holes, intersected the pegmatite dikes with significant spodumene mineralization. Again, some of the grades you can see there, we intersected 11.27 meters at 0.9. We have obviously some shorter intervals that were bigger. But in general, these are the kind of numbers that are, that we're looking at that are similar to the other companies. And, we really, from this, spurred us on to keep drilling, as, we need to really just put a lot of drill holes into this project in order to continue it and to find those larger intersections that are there. 2023, we did, so far, we had a drill program come out. We've only had a couple of holes come out, but those holes were important because they were the first holes that we drilled at depth. And these holes showed us that we do have mineralization at depth. And so we were spurred on by that because it just happened to extend the actual strike length at depth to about 500 meters, which is important. We have, if you look at those numbers that I sent you before, you can come back here and you can see the kind of average grades that are required in order to get to this level. So, off the cuff, what we're seeing is that generally you have to get to about 10 million metric tons as a baseline. And, looking at different companies, and again, this is just, this is something that just noticed from financials. A lot of companies are getting about $100 million in value for each 10 million metric tons that they find. You can see that some of these that will be going into production, and you can see our numbers here, how they fit in. So we're just at the beginning, but I think the important thing is that a lot of these other companies have drilled 15, 20,000 meters, and we're just starting. So we're definitely in the wheelhouse, and we're excited about continuing with the results. We can look at some of the results that we do have. We have a large pegmatite that sticks out, and for those of you who don't know, spodumene is found in pegmatites, and then you have lithium in spodumene. So it's important to look for these pegmatites, and this property was chosen because it has a massive pegmatite. So we've only really drilled the very easy target. We haven't really gone after all the other targets yet, but we can see that, even from surface, we've tested to 115, and then recently we're able to test some of those deep holes to see that it's there. So we've got multiple untested pegmatite outcrops at Pontax. We have a lot of walk-up drill targets and resource definition drilling that has gone underway over the last 4 or 5 months that our partner was carrying out. You can see, again, the 700 meters on this slide. You can see some of the numbers that are in there, and that it's open in a number of directions that we have to, continue to test, which is underway with the winter program. So I think it's important here for investors. We decided to do an option agreement and really keep our float really tight. So we wanted to have a tight float, wanted to have money in the bank, and with the market the way it was, we felt it was best to go out and find good partners. And where are the good partners? Well, a lot of the most successful companies that you see, they're Australian partners. Australians tend to support, obviously, lithium exploration. They understand it. It's something that they've been doing. They're one of they are the largest pegmatite hard rock lithium producers in the world. So we found a really good group, and we felt our best success was to find that group that has the skill sets, they understand it, and they have the support that they're able to financially support the program as well, which is important. So the deal that we made with them was that they have sold an exclusive option to acquire up to 70% undivided interest in our flagship Stria Pontax lithium property. We formed a joint venture, and the terms of that venture come in 2-stage options. So the first option is that they can acquire 51% interest. Cygnus is required to incur exploration expenditures on the property of $4 million, and they would give us $3 million in cash. So they've already paid the initial payment of $1 million, which is completed. We have just under $3 million in the bank, and we should be getting another payment for them shortly for the first option of another $2 million. And whether we take that in cash or shares is another question, because they do have a number of other good things happening. The second option is for them to acquire an additional 19%. And in that case, they would incur additional $6 million in exploration. And following that, they would pay Stria another $3 million. So we felt this is a very good program to not only get the skill sets, but also for us to stay, with a full bank account, and for someone else to be spending the money while, we keep our share structure, like I said, at that 25 million number undiluted. So there's a few things happening for the next steps of Pontax. I mean, the biggest thing is it's largely unexplored. Cygnus was ambitiously going after a 15,000 meter drill program, and we had built a road in order for them to go in. So they built a winter road, because the drilling in this part of James Bay, there's a bit of a bog there, and you really want to drill when it's wintertime, when the ice freezes, the snow freezes, you compact a road so that you can bring in land drill rigs. So they did that. They had up to 3 drill rigs that were currently drilling and are about to come out shortly. And their goal was to try to get a maiden resource out sometime in 2023, the second or third quarter. And I think that it's gone well. We will definitely learn a lot about the project from there. So there's going to be a lot of assays that should be coming out. It's not one of those stories where there's no drilling. We're highly impressed with that group. They had up to 18 months to drill to do their first option, and I think they've surpassed that, in about 6 to 7 months. So they have the right idea. When you're drilling for lithium and looking for lithium, we know it's there. It's a matter of just finding, where the best intercepts are. But in an open pit, you kind of gather and capture everything anyway. But you really have to drill it. You have to have money. You have to drill it. Our partners have, 15 million in the bank, and they've committed to spending, and they have been spending. So we're looking forward to that. You can see here's some news flow. I mean, we've got some new regional targets. We have, a drill program underway to create some form of a resource this year. We're going to have a lot of drill results out from the winter drill program. They'll be doing some more regional mapping and sampling in the summer. I won't be able to start drilling again probably to July, but we should have from now till then a lot of news flow coming out from the fall program. That was about 1,800 meters. And then we've got, we're not sure exactly, but might be 8, might be 9,000 meters coming in. So definitely going to be an exciting few months. As far as the management and governments, our board is extremely strong with Jeff York. Jeff York brings to Stria Lithium, decades of leadership. He's very successful in a number of iconic retail outlets where he was president, CEO, built those companies, both of those, into multi-billion-dollar companies. The last one sold for, I think, 880 million to Sobeys. Very strong business acumen, so we're very lucky to be able to reach out and get direction from Jeff. One of the interesting things is Jeff, during this tenure when lithium wasn't going that well, wasn't as interesting to the market, he actually funded the company with his private money so that all the shareholders would stay whole. So it just shows to the kind of person and acumen that we're dealing with. So we're fortunate to have him. Myself, we have Judith, who is, interestingly enough, is a geologist and a CFO accountant, which is a very rare combination. So we're fortunate to have strong leadership and experience in that, and she has critical minerals experience with the graphite company. And our special advisor, Sarah Loft, who handles Indigenous relations. So it's a strong team. I think one of the most important things is this next slide, and I think that this is kind of goes back to the initial strategy that I mentioned, is that, we're a TSX listed company. We also are listed on the Frankfurt and on the OTC. Our market cap, doesn't really reflect the money in the bank that we have, nor the money that's coming in the project. So we're really at that early stage. We've got a really tight share structure. And I think that tight share structure and the fact that we have a partner that is aggressively drilling with results is kind of, for an investor, I know when I'm investing, it's difficult to move stocks that have hundreds of millions of shares outstanding. So I think if you see the share structure and that we're not really in need of raising money, with a quite low burn rate, as we're not doing the drilling and exploration ourselves. So that kind of ties into our overall strategy. And that's it. And Jack, you're open to any questions that you may have, or any of your investors.
Okay, Dean, can you see me?
I can.
Okay, fantastic. Okay, so we'll get some questions here. Now I got a question, actually a couple things I want to focus on. So there are two slides that caught my attention, which was slide number 6, which kind of showed you the neighborhood, the comps, because we always want to see what are the comps in the neighborhood. What's the path, to value creation. So that's very helpful. Maybe we'll show it again if people ask about it. But and also 18, which was the news flow. I mean, I made a note of this because this is really helpful. I mean, it's very rare that we see these things in a presentation. This is what people really care about. So we got a lot of news flow coming up. So you have massive catalysts coming up now, which is the assays are coming in. And that actually, we got somebody who's asking about when the first assays come out. So we actually had the first assays, no? You had
so we had 2 holes that came out.
Yep.
They were the first 2 holes still coming out from the fall program. So none of the winter program has really come out yet as far as the assays. And again, I can't quote exactly, but it would be upwards of 8,000 meters. The fall program was about 15 to 800 1,800 meters. So we have some assays still coming out from the fall program before we hit the winter program.
Okay. Actually, let me. I'm going to put up this slide on the screen here because this is actually, I had the wrong one. Okay, so the comps. Okay, so you're basically in like elephant country when it comes to lithium, right? So, James Bay, Quebec. Two things. I think what's a really important distinction is, you've been an investor in mining stocks for many years, right? And we always know that the government, I mean, in recent years, governments really, especially in North America, they really hate mining, right? I mean, it's something they hate. But when it comes to lithium, battery metals, they're the ones that are really pushing it because this is, this is really, they want to push get rid of the the combustion engines. They want to get rid of gas. So they're really very favorable. So I think that actually creates like a tailwind for lithium stocks, where we can see value created much faster than we can in traditional exploration, like gold or whatever it is. Does that would you agree with that?
Yeah, I think the biggest thing that, and I'm not sure that the public really understands. So myself, what I've come to realize is that yes, they'd like to have the EV electric vehicles, and they do want to lower the carbon footprint and have the zero emissions. But even bigger than that is to take back control of having foreign dependency on something else. So the reason you see the governments behind this is more about, they understand that now they can actually be the new Saudi Arabia, the Middle East. We have the critical minerals here. We don't need to go out. We can also, because it's technology and because it's a different type of movement for vehicles, we can actually participate in the automotive sector more if we keep the critical minerals here, and then we encourage others to come here. We can actually be building, supplying, making batteries, and being kind of holistically whole without having to go out to anyone else and deal with everything within our own country. And I think they've learned that this is important from a geopolitical perspective, but also I think you see the sentiment coming back that we also need these jobs, right? Americans, Canadians, we need to be able to do these jobs.
Dean, everything is going in your favor here. I mean, again, you got the supply chain thing because you're right in Quebec. You're across the street basically from the automotive world, which Detroit, etc. Plus, I mean, I guess in the U.S. we have car manufacturers now like Alabama, other places, but everybody wants to be closer to to their supply chains, and also one of the other things is you have the infrastructure. I don't know if you mentioned that in your presentation, because one of the great things about your project is that it's not in the middle of nowhere where it's like you're gonna have to spend half the you're gonna have to spend half the money trucking the lithium in. You're basically right near a major highway. Is that?
Yeah, I think the big thing that when we picked this project, and I didn't pick it, but when the project was chosen in 2013, there was a lot of lithium projects, and they picked it on the geological perspective of it. But also the main reason was it's close to the main highway. And I think in order to reach where we're going to reach, there'll be a number of smaller type lithium projects like this that will kind of get scooped up within the region. And the closer you are to a road, the less capex you have, the better. I know a lot of people get excited by some of these large intervals that they find, but you're talking about a project that's 800 kilometers in the bush, and they're looking at a deposit that's under a lake, or all these other issues, which are going to take time. It's not that they're not good, but the reality is, in order to meet the objectives, the closer you are to the road, it's not hard to separate lithium from the host rock, and it can be done in quite a simple capex to get it going. And you really need to just get it to the rail, and from the rail you can ship it to the battery manufacturers and other manufacturers who will take that and turn it into hydroxide and other things. So it's important definitely to be close, and we're right there. And we have hydro. So we have access to hydro, which is important. I mean, you can think of how long it takes to bring hundreds of kilometers of hydro poles into your project. Well, we don't have that issue.
Okay, let's talk a little bit about these comps here. So the idea is that So also, what I really like about the story is you have a really experienced partner in the space, right? These guys have experience in this type of geology, and they're putting up all the money. They're already showing, not only in theory, a lot of times in theory, yeah, it sounds great, but not only are they putting up the money, but you've already seen the track record, right? They've already aggressively drilling, which is a great, it's off to a great start. So you mentioned that we're expecting a maiden resource possibly in the second half of the year. So we could be a few months away, basically, right?
Yeah, absolutely. I mean, it's, obviously the cautionary statements we have to be
Yeah,
careful
yeah.
to say, but I would say that if you look at the drilling that's happened so far, you look at the comparables with the percentages that are there, and if you're waiting on 8 to 10,000 meters of drilling, this is what their goal is to, they've been drilling in the correct spacing in order to be able to do that, right? So Canada is very strict about 43-101 rules in order to space them, a certain space, spatially put them aside so that you can get the resource. So we'll see where we do end up, but definitely that's the goal, and they're drilling enough for it. And one
Okay.
of the important things to just add to that is that when we chose them, it was important to know that they had the financial backing to be able to do it, because you pick a partner and then they don't have the money, they can't drill, we're stuck as well, right?
Yeah.
So we kind of bet our horse with them on their skill set, their ability to raise money. So they've proven to us. I mean, they've done, instead of 18 months, they've did it in 6 to 7 months.
That's huge. I mean, they've actually outperformed. I mean, they've over delivered. So for anybody that's not, we got a lot of people in our audience who are not experts in mining stocks. So let's kind of break it down for them. The idea is this: is that with these resource exploration plays, it's like biotech stocks, right? The idea is you want to prove, again, it's like science, right? Biotech, mining, it's different types of science. So essentially you want to prove that you got something, and then when you have that something, then you sell it off to a bigger partner. The idea is you're never going to go really into mining product. It's obviously that Cygnus is gonna take it to the level where I guess they could sell it off to a producer. Is that right?
Well, they have experience in that. A lot of their management team and the founders of this company have done it before, right? So they've done it in Australia, brought companies to $1 billion market cap. So I
Oh,
think
okay.
for something like this, you're going to have hubs, and if you see there's plants going up in Bécancour, Quebec, from GM, BASF, POSCO, that are happening, and so you're seeing kind of like little hubs get put together, and we're right in that hub. So you don't have to be that big to go into production. It's not like gold where you need a massive production. You
Okay.
can start quickly, get the ore very profitably, get it to, say, Matagami, and put it on a rail car and send it to where it has to go. And again, being close to the United States, I think that's why you see these other international companies, battery manufacturers, etc., showing up in Canada's door to take advantage of that, because we
Okay.
do share the largest unprotected border.
Okay, so that's another critical point, because again, like a lot of people are familiar maybe with like gold, gold exploration stocks, etc., where you really need to have a lot to make it work. You got to have big resource here, because of the way the system is produced. So you don't need as much. You don't need as much or as much resource to become economically feasible. So the bar is actually quite low. I mean, or it's at a reasonable level. Does that?
Yeah, I would say the difference when exploring in gold mines, they're always chasing this vein, right? They're trying to find the veins move here. And so you miss. Like you could see with us, we haven't really missed that often at all on the actual lithium within there. It's just a matter of how much. So really what it takes is, if you have it there, it's more or less, you need to put money and drilling at work. You have to just drill and keep drilling to see where are the best intervals, where will it be. But it's an open pit type mining when you're doing hard rock lithium. So you're capturing, even if they're smaller intervals of lithium, you're capturing everything, and it's not difficult to separate. So I'm not saying it's a slam dunk. The drill has to perform. So the drill does have to perform. But if you look at the grades, and if you look at some of those other grades, 1.4%, 1.1%, these are the type of grades that make it economic in this
Okay.
area. And
So
again,
we got the slide up on the screen here. Okay, so let's talk about the comps. Okay, so you have what was it? Sayona, right? Sayona has got a $2 billion valuation. They have a 1.1% grade, right? Your grade is one, so it's your grade so far is a little bit better, right?
well,
Based on
this is our best intersection. I mean, we have grades that are higher and lower depending, but just kind of shows that from the initial drilling that we've done, we haven't done a lot of drilling.
okay.
You know, we've come out with these grades. So, you know, to tie in the math, you can see, for example, if you have 10 million metric tons in the market, you see they're getting roughly $100 million market cap. That's kind of roughly, I mean, it's not, this isn't science that I can put on a limb, but if you kind of look at it, that's kind of what it looks like. So you can just infer, if you get to 10 million, you know, you're worth 100. If you get to 20, you're 200. And then you can do the math on us. If we're successful, we're a 30% partner in 100 million, or we're 30% in 200 million. You go from 30 to 60, and then, you know, you can do the math.
And we're going to know that number, I guess, hopefully in a few months when you get this resource. We'll know how many metric tons you have.
Yeah, and I think that that's just the beginning, because again, they haven't stepped out off of the main outcrop. So we kind of went for the low-lying fruit. Like they've gone out and drilled the obvious, but a lot of
so
times
blue sky.
there's on the obvious.
Right. So there's basically blue sky potential. This is what we have here is just the appetizer. It's not, you know, there's still blue sky upside here.
Well, how I would say it is, if you consider something like an iceberg, okay, you see the iceberg, you're looking for ice. You see it there, you say, okay, let's bang the iceberg. But generally where you find, you know, most of these companies where they found the best results are not necessarily on the iceberg. It's the 90% underneath. You can't see it, but it's pegmatite, it's underneath there. And when you pull it away and you drill, that's where they're getting the really, really good numbers. So there's a lot of opportunity. I mean, if you go on the site, you'll see how big the outcrop is. But if you think of how big that outcrop is, you can imagine just how much is underground. And it's a matter of drilling. It's not a scientific, you know, there's science to it, but you really have to have money and drill it. If you don't have money and drill it, you're never going to find it. So you need aggressive partners with money.
Okay, and you have that, right? So this company basically, I mean, it's like you're checking off all the boxes. I mean, essentially, you have the experience. So, you know, one of the big issues with companies, okay, do they have the right project? Okay, it's here you have the right, you know, it's the right project, it's the right location. Next question is, okay, do they have the money to fund the project? Or actually, no, the question is, do they have the people who know how to drill, who have experience? And you have that with Cygnus, and you also have the money. So this really like kind of checks off all the boxes as you kind of go down the list. You got blue sky potential. You're in the right, again, the neighborhood is great. So far we're seeing good stuff, right? So I guess okay. So the point is, we need how many more? So we need to have how many meters of drilling with 10 to get the 43 you need 10,000 meters of drilling.
Well, it's hard to say to be exact. If you know, you need to get to 10 million metric tons, and it depends, you know, how much drilling you can do. So I think in this case, the winter, you know, was slowing down, so they had to shut the winter road down. Otherwise, it would just continued straight through. So I think we were limited from that, and we'll start back up. But it's hard to say. But I mean, obviously, with 10,000 meters of assays, you know, there's going to be something there, right?
Okay.
So you know, it's hard for me to, you know, to say bound, obviously, with cautionary statements and what have you. But definitely, you know, one can infer if you got 10,000 meters of assays coming out, and you're drilling for a resource, then that's what they have said in their.
And we're going to be getting that. We're going to be getting those assays coming in, like literally, you know, I don't know if I can find news flow stuff, but like it's going to be coming in the coming weeks.
It's continual.
It's continuous. We're getting stuff as you're getting, because they're backed up. I think last time
they're backed up. They're backlogged. And they had 3 drill rigs going up until, let's say, you know, a couple days ago. So, you know, there's a lot of assays, and then they have to be pulled out when the winter road, before the winter road
Okay.
melts, we have to get the rigs out. So you've got a lot of assays still have to be coming through, but then we have ones that were done in December coming out. And I mean, I think for most investors, you know, and I'm the same way, you know, I want to see action. I want to see drilling.
Yeah.
So, you know, it's like I've been in these stocks where you go up a hill
Right.
and, you know, they're driving up the hill, there's assays, and they stop. And then, you know, they roll back down the hill, come back to where they were, and then start up again. I mean, what I like about this group is they understand, like some of the other successful Australian companies. If you look at Patriot Battery, you look at, you know, Winsome, you look at these guys, they're all Australian ASX companies because they
Oh,
have the
that's
funding.
okay.
They have the funding. They can go out and do it. And they don't mess around. They go out, they have the money, and they just drill, and they drill heavy. And that's what you need in this type of market. I mean, it's a race. It's there. You got to find it, and the only way to find it and prove it out is to drill aggressively.
Yeah, Dean, I think, you know, I think the investors. Oh, hang on, we froze up. Dean?
Yeah.
You did? Okay. The computer I think the internet froze up. Okay. So Dean, I think what our audience would really appreciate is kind of, you know, your appreciation, you know, your respect for the news flow, and because, you know, you've been there yourself, you really understand how important it is to maintain that news flow momentum. I mean, this is absolutely critical here. Yeah, I mean, by the way, your metaphor about the car going up the hill, you got to keep your foot on the gas. Like with the new, it's really incredible. Let me ask you this question. So bottom line is the company, you know, your team, your expertise has been in finding the right property, right? So you find the right property, then you bring in the partner. Now you have cash. You're sitting on a bunch of cash. What's the game plan? Are you going to be looking at other properties? Like, you know, how do you see creating value here beyond what you have? Like, how do we get that blue sky potential for investors?
So I would say there's the two blue skies. One is the fact that the property itself is underexplored. So there's a lot of blue sky outside of that. So that, you know, when you have 3,613 hectares, it's a lot. We're in the right area. You see all the other key players in there. The other one is that we're continually looking. I mean, we're on the ground. We're here, and we're looking for other projects as well in the area. If they're close by and adjacent, we're not looking to go too far away, because again, part of our strategy is like, we want to make sure that our investors and ourselves get the biggest return. And for us, that means we either find something that's really good close by and that's exciting and we can do it again, and we can drill it out and look for it and try to find another partner or do it ourselves. But key to us, and I think that unlike a lot of companies, you know, we want to make sure that you hit a home run, you win the Lotto 649, you take the Lotto 649 and then go buy another million tickets to try to win again. So the blue sky's there. The project was picked up in 2013. It's massive. We can go there for a long time drilling. And we do have, you know, we are looking at some other good properties close by because we're hustling in Quebec in this area.
You know, okay, so I got the map here. I got the map back up. So in other words, how can you walk us through, like, how big is the project? Because, like, how much of it have you drilled? Like, show us on the map. Like, can you explain what we're looking at?
So there's a big pegmatite that's sticking out that's kind of represented here. And so far they've drill tested it, you know, and hit lithium and spodumene within 700 meters. So that's the extent of it. But again, that 700 meters, it's probably about, visually, it's even larger than that, is like an iceberg. So underneath is way more, and we just have to look and find that. And then there's a number of other outcrop pegmatites on the properties as well. So this is just the main, what we call Pontax main and central, but there's a number of other pegmatite outcroppings throughout the property that we would go out and drill. And it's not, you can't really see it on this because we've condensed it because the property is so big. So as a, you know, if you go on the website, you can kind of see the outcrop from a bird's eye view, and you can see that this is just a very small part of the property, but there are pegmatites throughout the whole property. And that's why it was chosen back again, 2013. It's important for people to understand this project was chosen, it was kind of shelved, but it was picked back then, the merit, right? You can't find these projects as easily anymore because people are, lithium's become popular and people are trying to get in and find it. But we picked it when, I would say it's like buying oceanfront property in
that metaphor you used the first time.
Florida, right? 200 years ago. Well, yeah, you're going to pick the best part facing, the sun with the nice sandy beach. Well, that's what we did. And now someone's actually exploring it. And that's the big part of this upside on this property.
Yeah. It's in other words, so you got this amazing property because, again, you were in the right place at the right time. You got it when nobody was looking for this. Now you have it. Now, percentage-wise, what percentage of the property has been drilled compared to the whole size? Like, give us a percentage. Like the current area represents what percentage of the full thing?
It's 700 meters, and you have 3,600 hectares. So that it's a needle in a haystack, really. If you
hectares, how big? How many? Like, what is that? Hectare is how much? Like,
so yeah, you'd be looking at you've drilled out. You've maybe started to drill out, and we haven't even drilled it out yet. You're at 4 or 5 acres, and you've got 3,600 acres, right? But
wow.
Again, you're not going to drill everywhere. You're going to drill wherever you see the outcropped pegmatites on the property. So there are other locations, and some of it is hidden with ground cover. So up there's like an 18-inch kind of bog ground cover, so that they're using the LiDAR and surveys to be able to see where they are. And then that's why they'll do some, taking back some trenching and what have you to remove the ground cover to expose the pegmatites throughout the property to drill. So that's a big part of it. You can't visually see them all. And that's why I use that iceberg type analogy.
Okay. So the reality is this, for, in terms of to break it down into terms investors can understand, is that, as you show more drill results, any type of information that indicates the potential for, more of this, potential lithium, that creates a upside for the stock, right? That creates, catalyst for the stock to move up, as you get this resource. And you've only scratched the surface. You're in a 5-acre area so far out of this massive 3,000 plus acres.
Yeah, it's a very small part of it that's being explored. And I think just in if I was to look at as an investor and step away from, a CEO position in this company, and I look at it from an investment point of view, we've kind of tried to set the company up how we ourselves would like to, invest in companies. And one of those things are, you want to have money in the bank so that you're not continually diluting, especially, when markets aren't the greatest. For me to go out and spend $10 million on the project at my market cap, you can think of the dilution that would have to occur. So for us, the company's really set up about, it's important. We got a really tight share structure. We have money in the bank. We have more cash coming to us. So we don't need to go out and get more money. And we will use our skill set to find other local proximity projects if they're good. And if results come out, it should translate without having a really large share structure. It should translate for the investor. And I think that's kind of what we're looking for, is that we're going to have money in the bank. We got a tight share structure, and we got assays coming out that we didn't pay for. And that's really, in a nutshell. I don't know how else to.
It's a great setup for investors, again, because you don't need to go out and raise capital with dilution, which is a problem for a lot of these other companies in the space. Everything is already done. So at this point, really, essentially, somebody who's looking at the stock, they buy the stock. Essentially, all they got to do is just like sit back, with popcorn and wait as these drill results come in, as the assays come in. You're getting this resource. Everything is paid for already. The company has to do nothing. But obviously, you want to create more value, and that's going to be, you're going to be looking kind of in the neighborhood for stuff that is where you have kind of economies of scale, so to speak, where you can pick up additional projects. So that you got blue sky over there. You still have plenty of blue sky in terms of more areas in this 3,000 acres to explore. So, it's an incredible setup. Okay, Dean, let's kind of wrap up. In terms of the news flow that we're expecting in the next 6 weeks, like what are the catalysts? Like it's basically going to be the assays coming in from the fall program, from the winter.
I think you'll see the assays probably come first, obviously, from the fall program.
Okay.
And they'll start coming out for the winter program. But again, they had 3 drill rigs at one point drilling and would have continued if it wasn't for the weather. So it's the first time in Canada I was actually praying for cold weather. But I think as an investor, yeah, you should see the results continually coming out, because if we were drilling in December, we still don't have some of those drill results back, and they'll start floating in. Then you have January results coming back, February, March. And now, we kind of slowed down, but they'll start to keep coming out and trickling out. And then they'll probably start drilling again in July with the helicopter-borne drilling. So we have to wait until that. We have to observe some of the, the natural habitat and surroundings there, and be good environmental corporate citizens. So we take a break and we'll get back at it. But the results will take us right until that starts again. So there shouldn't be a lack of news flow, which is, I think, important to the story. And I'm glad that our partners in Australia, Cygnus Metals, share that. And again, the Australians.
I appreciate that. I appreciate it, Dean, because one of the problems one of the big problems in the space for investors is companies that don't have that regular news flow. And you appreciate. This is one of the few times I've had a CEO come on the program and really share his concern that the importance of it. It's critical. The news flow is absolutely critical. Let's wrap up on a final question. Is in your opinion, what would you say top 3 reasons why investors should consider Stria Lithium today? If you had to top 3 things as an investor, give us your perspective, because you're active in the space.
So I would say, for Stria specifically, I would say it's the tight share structure. You have, a really good property that was chosen when it was very difficult to get. And you have a drilling partner that is drilling aggressively the project without dilution for Stria as a shareholder. So I think that, coupled with the fact that when and if it's there to the level that it needs to be, you don't have to worry about a crazy CapEx and all these other things that most shareholders don't really look at. Most investors don't look at that. At the end, it has to make money. At the end, it costs money to put into production. So if you find something in the middle of a bush and you have to fly there every time with a helicopter and you can't get it out and all these other things, it just eats away at the project and makes it very difficult to put into production. So for us, I think it's also, if they get to where we need to go, it's the time to market that we have, because of the fact that we have electricity and are close to the road. Those are major, major advantages that we have. And lastly, just one last thing I would say is, I think the public needs to understand, it's not just Stria. Of course, I'm here to explain Stria and I love the project, but critical minerals in general for North America is the future, because the government has decided to legislate the demand on one side and then support the supply on the other side. And it's unheard of. You've never seen that. So I think when you see governments behind pushing on the supply side, reacting quickly to be able to permit mines into production, because they feel that the value is in overall, it's a bigger benefit from just a geopolitical risk, but also from an environment perspective, that it outweighs it. So then you do have a positive mindset towards critical minerals. So that this North American critical minerals are something, I think, in general, not to be self-serving, but in general for other companies. And if you look at companies that have cobalt or nickel or anything else, this is the future until, we're looking at 2030, 2035. It's not that far away, because you do have a lag between exploration and into production in order to support those vehicle needs that they have. And you've got hundreds of millions of vehicles on the road that have to switch over, and they use lithium.
Yeah. And okay, so there's 2 points you brought up, which I just want to kind of go over again, is that for investors, the key thing is this. You mentioned something which people really should consider. A lot of times, you have you have stocks out there, or companies out there, which have some amazing project, everything is great, but because they have so many shares outstanding. There has been so much dilution, and the project, the economics of it are like such that they really have to have a massive grand slam to make it. Even if it's a grand slam, just the bar so hard that by the time it's actually a win. So even if they win, by the time the shareholders really can't make any money. It's almost like you bet on a horse race, and the horse becomes that favorite, and the horse wins, but by the time the odds drop to 1-1, so you just get your money back. You don't even make any money. I mean, it's like, what's the point? Here you have real torque because you have very tight share structure. So any type of positive news, any type of developments can have a real effect on this. Everything's been paid for, so there's no more dilution, and you have the economics of the infrastructure and kind of the neighborhood, everything else make it very kind of, you have a very low bar for it to become economically feasible. I mean, I guess that's kind of the key points to consider.
And I mean, we have a low burn rate where we have to mitigate the risk, I think, for our investors, and that's why we have this tight structure. And we've also have capital coming in from the deal to help fund us as well. So we're expecting a couple $1 million shortly if they exercise their 51%. So that helps. And I think that's the key, because sometimes it's not as much about the company. And I've seen a lot of companies as an investor. I've invested in a lot of companies, and I understand the position they're in. They would like to go out and drill, 10,000 meters or 20,000 meters, but it's difficult to do if your market doesn't support it, right? And that happens at times, as we know. And that's one of the reasons why I think, if you notice, all the most successful companies have the same ingredients. They're Australian companies. They have access to a lot of money because they understand lithium. Their investors understand lithium. They realize that they better get over here into North America because that's where the future is because of the government. And they can afford to spend the 10 million, the 5 million, etc. Whereas sometimes the other companies have such a low market cap and they've blown up their share structure, they can never get there because their share structure is out of whack, and they're sitting at a low market cap with hundreds of millions of shares out. And I think that's kind of, they get caught, and we don't want to be in that situation. We want it to have a completely tight share structure. We want someone who's going to spend aggressively, and it'll be a lot less dilutive for us. And the government's ahead of everyone. In this case, it's the first time I've ever seen the government is leading the charge over the investor.
And so we got a couple of questions that came in. So that leads to, so Mike is asking, are the environmentalists that stand in the way of drilling? I guess they're actually probably in favor. I mean, in theory, they should be in favor, right? Otherwise, how are they going to get around if they don't like gas, they don't like oil? What else? How else are you going to drive your car? Lithium.
Well, what I think people have to understand is that we don't have environmentalists in the way of drilling at this point at all. The land is also in the most favorable area. So we're on Crown land, but historically it's the Cree indigenous nation, and the Cree are completely advanced. I mean, they have the Cree Mineral Board with PhDs on it. They understand what's going there. They actually asked the Quebec government to build the roads where we think that they'll find the minerals so we can get them out. So they didn't want the road just going where normally it was going to go. They said, look, if you're spending money, put the roads where we think the minerals are going to come from so we can get it out. So we've got a really advanced indigenous nation. And again, the governments are pushing it through because they've realized, the benefits of mining and the benefits of electric vehicles outweigh everything. And secondly, mining's changed. People have a very archaic vision of mining. Today's day, with technology, with governments, with processes and protocols, I mean, mining is a new face. There's new faces in mining. There's a new approach to mining. It's like everything else. I mean, they've caught up. It's a modern type of setup with the metallurgy. You have to put the mine back exactly how you found it. So if as far as
sustainable,
it's different. So yeah, I think overall, to answer his question simply, we don't have issues with that.
Question. Okay, so it says trading on OTC has been like Brad, this is what we're here to do. We're here to get eyes on the stock, and the OTC. We're going to get U.S. investors looking at the stock. So the companies just now, today is really the first day. Think of today as the first day of getting U.S. investors to discover the stock. I think over the next, generally, I think usually takes about 4, 6, 8 weeks, and you're going to see things progressively increase. Over the next couple of weeks, we're going to start to see numbers going up. That's what we saw. I think the last lithium deal we had was a company called FE was the symbol. FEMFF was the US symbol. And if you looked at that chart, we were working them about last year, March, and the volume in the US really just went from like nothing and it just exploded. Again, if you look at that chart from last March, I think it was March of 22. So I'm expecting, again, I'm not making any price predictions, anything else. I'm saying that we're going to get eyeballs on the stock. That's our job, to get the company in front of US investors. And we've had a lot of success with the other company, for First Energy, for FEMFF. That stock actually was a triple, also lithium company in Quebec. Dean, I don't know if you know them, but hopefully we might get the same results, and maybe lightning will strike twice.
Well, actually, I think we're just starting. We want to get the awareness out to the American investor, because
and also FCO was another stock that did very well. FCO on the venture exchange, volume exploded, but it doesn't happen on the first day. It's going to take a few weeks. We do this organically in a sustainable way, just like the new face of mining is sustainable. So it's sustainable. Dean, I want to thank you for sharing the presentation. We're going to have you back. Let's say in 2 weeks from now. Let's kind of, set a date 2 weeks from now. Hopefully, we'll get some assays by then that we could talk about. We'll have some more.
I hope so.
Audience. Okay, fantastic. Dean, thank you again. Thank you everybody for joining. We'll see you.
Thank you very much. Appreciate it. Thank you.